Well, you have night and day difference in bank regulation. This is once in a generation deregulation. Since the financial crisis, regulators didn't want banks to merge so much. And now it's back to the future. When I worked at the Fed 35 years ago, we approved bank deals in 90 days. And guess what they're back to doing? They're back to approving deals.
Is that a one-off with Trump? And after President Trump, we see something different?
No, I think there's a realization that the lack of bank deals was a gift to Jamie Dimon. I mean, you just prevented a lot
I
of...
happen to agree with this, but continue.
Yeah, no, bank mergers are needed instead of just having, Goliath is winning.
Yep.
JP Morgan's the Goliath of Goliath. And to put this in perspective, the bank that just sold to Banco Santander, JP Morgan is going to spend about $20 billion on tech expenses this year. That would equal 15 years of the bank that just sold's total expenses. So how do you compete if you're a small bank? Scale is more important than ever before in banking. So you have the need, you have the ability with the regulation, and it's happening. It's just getting started. This is a new era for bank mergers. Once again, Tom, as you may recall, in the 1990s, that's when I made a name for myself with our bank franchise value model. And this morning, I reintroduced that bank franchise value model to highlight hidden values at banks.
Do you have to pay a royalty to Credit Suisse? Paul Sweeney, jump in with Mike Mayo.
So, Mike, how is this merger wave going to look like in the bank space? Is it the regional banks just regional banks merging? Are we going to see creation of more super regionals? How's that going to look for us?
I think it's going to be banks that rank 20th to 100th in size. And I think you'll see, deals where you have undervalued banks. And remember, 2023 wasn't that long ago when you had some regional bank failures.
Yep.
And several banks were looking at the abyss. And their long-term value is debatable, but their short-term value is still very much there. So I think these kind of mid-sized banks, have their moment of reckoning, and I think this is a window too, where I think mergers are tolerated, encouraged, and that might not last forever, like after the Trump presidency, but it should.
How many banks will there be in 5 years? I mean, am I right? We went from 16,000. It's like Thomas showed it. Keith Briette would know this. Down to 4,000 banks now, right?
Yeah, from 15,000 to 4,600, and I'd expect the number of banks to be cut in half over the next next 10 years.
10 years. Okay.
Yeah, I got a neighbor of mine who I commute with. He's postponed his retirement. He's a banker on financial services. He says, I'm going to make a lot of money in M&A the next few years. I'm not retiring. So what's driving the consolidation here? Is it that technology investment that's required? You mentioned JP Morgan versus some of these smaller banks. Is that what's driving some of this consolidation?
Yeah, I think the need for scale has never been more important. But you know what's happening right now? The level of competition in U.S. banking is the greatest it's been since before the global financial crisis. Banks are adding more branches, bankers, marketing, credit card mailings, technology, AI. Right. And so it's competitive out there. And so if you can leverage those costs over a larger customer base, that tends to benefit. So there's an economic reason for this happening.
For Global Wall Street, Stephen Englander with us. Now, Michael Mayo with us at Wells Fargo. Freya Beamish coming up here in a bit. Across America, everyone listening to Mr. Mayo, as they do within the banking business, the Smead family, fabulous value investors. Wonderful, wonderful contrarian track record. Serious stuff. And Cole Smead emails in and he says, you got to ask Mike Mayo about a bank bigger than Webster, and this gets into almost regional and super regional, something like Fifth Third of Cincinnati. They don't have 4,000 employees. They got 19,000 employees. What is a bank like that doing right now?
Well, there's a few idiosyncratic situations where you have exceptional management, and Fifth Third is one of those banks. The CEO of Fifth Third, Tim Spence, he's kind of the next generation Jamie Dimon, repackaged in a different form. And so far, they started off with their acquisition of this bank called Comerica. It was headquartered in Dallas. It just closed this past weekend. And amazing, their targets that they were looking for next year, now they expect to achieve in the fourth quarter of this year. And they think out of the box. They've had good technology. This merger is off to a great start. So I'd say they're the exception to the rule in terms of a bank that size.
I want to start a business. I want to build a multi-family residential thingamajig. Is my local bank going to make a loan to me? Are they going to bank me, or do I have to go somewhere else?
No, you can get loans. I mean, for a bank, it doesn't matter what size you are. It's easy to make loans. The hard part is getting paid back.
Okay.
So, in fact, a lot of
good credit.
If you're a customer, you go around, you can shop around to a lot of different banks, and sometimes these smaller banks are the ones who will give you the better terms, looser credit. Frankly, I think there could be more risk with these smaller banks. The reason you had national banking starting 30 years ago was for greater diversification. Remember the rolling recessions? It was New England and Texas and California. And guess what? If you had a diversified geographic footprint, less chance of failing. Whereas a lot of these smaller banks, once again, who looked at the abyss in 2023, are not as diversified.
Okay, Citigroup finally with a moonshot, 226,000 employees trading at 1 times book. JP Morgan's at 2.5 times book. Is Citigroup with a story? You finally got it. You finally got your big pop in Citigroup. Does it keep on going and improve that book value?
You say finally got the pop. Yeah, it was the best performing big bank last year. It's still my dominant number one pick. So I have a barbell strategy with my weightlifting theme too. We have the takeover target picks, banks like Bank United and Bank of California and Associated. But I also have Citigroup on the other side. And Jane Fraser is turning this company around. And if there's one point for those who cover all industries, how many restructuring stories out there are there that get 7% revenue growth? That's what they got last year. Even while they're restructuring, this is a generational restructuring at a time of generational deregulation. Citigroup is the beneficiary.
Will their distinction be they'll be international more than the other great American banks? What's the pixie dust that's going to drive her forward?
See, you're asking that question the way you would have for the last 50 years.
Why? It could be like a fossil. I mean, Alexis wouldn't have asked it that way. I understand.
But,
so what's the new?
The new is they've only had 8 quarters of this new structure. For half a century, they were organized as this global matrix mishmash structure.
Mishmash.
And now they have 5 lines of business, which I say simply payments, banking, markets, cards, and wealth, with a CEO in charge of each of those 5, each with a line of business target, and they are responsible. They all report to the CEO. That's simple but powerful.
20 seconds, single best buy right now, Michael Mayo.
Citigroup, I think in 3 years will be a $200 stock. That's not quite a double, but that's a long way. And by the way, there's no analytical gymnastics to get that valuation. They just go to 1.5 times tangible book value.